Hey YouTube, what's going on? Chris here. I want to bring you all an update on Litecoin. Right now, we're at $90.46. We're up 6.21%. Guys, what's happening is here we're getting a really nice candlestick formation pattern off the 0.5 macro Fibonacci that we're going to be looking at here. And what we're going to be doing is pulling from our swing low all the way up to our swing high from this intermediate term to longer term uptrend. And what I did for us here, I took off all our moving averages just so we could look at this Fibonacci, then we'll get into all the moving averages. But I think it's important that we're seeing some type of defense here off of this 0.5 at $84.09. And we're also getting the stochastic cross that we were looking at. If you saw my last video, it was about 2 videos ago, it was what Litecoin needs to do, the best case scenario, and that is actually playing out right now. We're having this stochastic bullish cross right now in defense and keeping these higher lows intact, because right now, guys, we're still having higher lows down in here. We're having lower highs. So what we're doing, we're chopping back and forth in this little channel here, and what we want to do is try to get back up and challenge around this $98.95. So we're going to get into a little bit more of this, guys. If you like these videos, like, subscribe, hit that notification bell. I appreciate you all being here with me today, and we'll get into this. So it's always important that the 0.382 is defended, the 0.5 and the 0.618. They're very key spots for bounces, guys. So say we took from our swing high and we got a really strong bounce off this 0.236 and we just continued the next leg up, something that looked like this, that would mean the trend is extremely bullish. If we bounce off the 0.382, that is bullish. That's great. That's a really good spot. You get a lot of bounces to continue moving up. The 0.5 is another spot that you really want to look for of defense, and then you look down to that 0.618. And a lot of times if you get a bounce off the 0.618, you'll get a move back to that 0.382. A lot of times that'll kind of be the range that it works in. But I'm happy to see that we are seeing a defense of this 0.5 on this overall Fibonacci that we're looking at, and we're seeing it come right here as we get that stochastic cross. So now what we need to see is if we get follow through. We want to get continued follow through so we can go up there and try to challenge that 98.95 in the next few days to come, because that's going to be that 0.382 overall level of the Fibonacci, and that's at 98.81, which is going to be a key area. And what we want here is more volume. I can't stress volume enough. Do you see this move, guys, where we had tweezer bottoms right here, and we made a move from about $75 all the way up to $106. That came on really nice volume, so we're going to have to watch this and pay attention to the volume here. We really want a strong move coming out of here, and volume a lot of times will clarify that for you. If it's a real move or if it's something where we may come up here and even set another lower high and then just start rolling back over. But right now what I'm seeing is good. We're having that nice strong defense there, and basically what we had yesterday, guys, it's kind of a mix between like a short day candle, a spinning top candle, and a doji candle. It has a little bit too thick of a body in here for me to be a doji, kind of like a little bit longer spinning top type deal. But what we're having today is that bullish engulfing candle where we're just really moving strong to the upside. It'd be nice if we could close today's candle where we're at right now. That would be really nice to get this cross down here with this nice follow through coming through the next day. So that's what we're going to have to be watching there, guys. And what I wanted to do as well was take you out to the 1 week, because I think it's significant to look at this 1 week as well. All right, so we'll go out to this 1 week, and right here, do you see about 4 times now we've wicked down, pretty close to 3 to 4 times that we've wicked down through this 0.5 right there. So exactly 3, guys. This one we tried a little bit, didn't necessarily go all the way down, but 3 times you've seen defense of that 0.5 at 84.09, and you can see we just really don't want to lose that, and traders can see that as well. And what I'm looking at here, I'm trying to find patterns in terms of, guys, this time here, this was about 3 weeks to the downside. This here, once we had this doji candle, so that was showing our indecision, we've had about 3 weeks to the downside. Then we've just been really kind of moving sideways here. But what we want to do is kind of compare each time we have these retracements, because if this is a spot now, we can have consolidation, move sideways, and then come up and make our next higher high, because we have been working in these higher highs and higher lows, and this higher low in the macro here has been defended. And also you can see the wicks where we've tried to get up to that 0.382 at 98.81, and that's why I said it's an important area that we want to pay close attention to. Now, If we look at our 1 week though, look where the stochastic's at. It's at 1.46 and 4, so it is extremely oversold, and it looks like we potentially could get across here. So what I like is the fact that we're oversold right down in this area. We're not sitting on the 0.5 with our stock all the way up at 88 and 90 on the 1 week chart. So it's good that we've had this cooling down period and that we potentially could make another leg up, guys. I think that's a really important thing that we do want to pay attention to, because you want to keep intact those higher highs and higher lows. Just like now, what I'm going to do for us, guys, I'm going to get this Fibonacci off here, and I want you to look at this. Do you see the lower highs and lower lows until we eventually reversed out of here and we started to make this new trend? And it's all about following those trends. They're so important. So now what I want to do is throw on our moving averages back on for us, and we're going to look at the week as well as the 1 day and just see what's happening with them. Alright, so the next spot to defend, if we are to drop to the downside, there would be our 50-week moving average, and that's going to be at $66.32. We'd hope for a strong bounce off that if we are to go to the downside. Now, to the overhead resistance that we're dealing with, this 21-week EMA is pressing down hard on us. You can see we can't get through that. We tried to wick up, and that's an orange. Guys, so we failed that, and that is still overhead, as well as this 100-week moving average in green. That's still overhead. So what we're doing is kind of getting sandwiched between the two now. That's why eventually here we're going to have that break. It's going to have to come here fairly soon. Now to go into the 1 day with our moving averages, just to work backwards here. Alright, so guys, what you're seeing here is our 21 EMA is still acting as overhead resistance. That's a really strong area for overhead resistance. We have our 100-day over top overhead resistance, and then we have the 50, and we're almost having a death cross here from our 50 moving average crossing down over our 100. So we do want to pay close attention to that. And yet again, we're getting sandwiched in between these moving averages, this 200-day moving average and this 21 moving average. And guys, what happened is you can keep squeezing and squeezing, and it can get tighter until it'll eventually just pop to the upside or to the downside. And what we can look to see if it's getting tighter here, we're going to look at the Bollinger Bands next. We're going to see how that's looking. So with the Bollinger Bands, guys, we're coming up to the middle band right now. And the middle band is going to be at $92. That's going to be a key area of overhead resistance as well. But you can see the bottom of the bands, we got that nice little bounce off it. And guys, that's typically what happens when you look at these things. When you get to the bottom of the bands, a lot of the times, yeah, it can fall a little farther like we did here, but you'll have a run up a lot of times to that middle band. And that's kind of what happened here. Here, we wicked all the way up through. But that's going to show you how overextended we are, either to the upside or to the downside. And right now, we're just sitting basically in between that lower band and that middle band. So we're going to have to see what happens here. If we can start closing up above that middle band and start making a move up above. But it's all going to start with this 21 EMA. That's going to be very important for us. But what I like to look at is basically the trends, guys. We've been in that short-term downtrend here, but overall, you can see with our 200-day moving average, we're still in an uptrend. And that's important to take note of. Okay, so guys, if you like these videos, like, subscribe, hit that notification bell. I don't want to keep it too long for you here, but I just wanted to show you some of the things that were taking place, and we are starting to get that stochastic cross. Now we want to see if we get that follow through right where we're at here. So it's going to be an important area to look at, guys. God bless and take care.